Excellent. Okay, so firstly, good morning, everyone, and welcome to our webinar on navigating tax debt. I'm joined today by our subject matter expert, Olga Koski from Tax Assure. Welcome, Olga.
Thanks for having me.
Pleasure. So before we start, just to let everyone know, this is open forum. So please, I've allowed for question time at the end, but if something is pressing and you'd like to ask, just put up your hand, or you can use, there's a chat box for Q&A in there as well. So yeah, just throw your questions in there and we'll get to them as soon as possible. So Olga, I'm going to start off and hit you straight between the eyes. We're sort of hearing rumours of it, but how aggressive is the ATO being at the moment in recovering debt?
Very. So a lot of people used to say we'll worry about it if the ATO come knocking. But now it's just a matter of when. One of the things we're probably seeing a lot of just in the last 2 months, a big change, is the ATO issuing proceedings against individuals. If they've tried other tools of recovery action, which we'll go through, that haven't worked, they're now suing individuals. We're seeing very reduced time between one step being taken by the ATO, such as a statutory demand, and then wind-up proceedings being taken. Voluntary payments aren't enough to stop further action. And so that path of the recovery and the steps they're taking and the court action that the ATO are taking is moving very, very quickly at the moment, which has huge consequences for all of our clients, for your clients, for businesses out there. But I think the thing that we've talked about when we were preparing this, and it's actually in the title as well, a clear path through, is the difference that actually taking proactive action can make. And rather than ignoring the debt, there are so many different steps with the right people, the right experts in your corner. And the difference between doing something before recovery action is being issued by the ATO compared to after recovery action has been issued by the ATO is huge. And I think that's another example of sort of the aggressive collection. But the people really need to do something, and there are solutions out there to help them.
Okay. So are you saying, is there specific industries they're targeting? Is there, repeat offenders or serial offenders that they're going after, or is it a lottery type system? It's whoever comes across someone who hasn't been proactive and engaged with the ATO,
Yeah.
and they're just going after them.
Yeah, so I think there was actually something in the media a little while ago where they called it potluck. So I think the lottery style is a really good
Potluck.
description. Yep.
Yeah.
That's what was the term that was being used in the
An
media. But
oxymoron, but yeah, okay.
yeah. Lottery is exactly the same. So we've got clients that we've seen with 150,000 of debt, which is still a significant number when you owe that, but quite small in the scheme of the overall outstanding debt, that have had proceedings issued against them for 6-month-old debt. And then we've got other clients that come to us with $2 million of debt that haven't had any proceedings issued against them. So I think it is a bit like that lottery system. I don't think we get asked a lot about industries. I don't think there is any particular industry at the moment that the ATO are more focused on than not. But I suppose the clear trend is if the ATO have tried one form of recovery, and because they've got a huge number of tools available to them, which we'll go through. If they've issued a director penalty notice, or if they've issued credit reporting, or if they've done one step and it's been ignored, then we're seeing that next step and the next action being taken very, very quickly, rather than an industry based or debt level based.
Okay, so getting on the front foot is key.
100%. Yeah, absolutely. That's the one thing that everyone can take away from today, and the message that we can get out there is absolutely get on the front foot and do something about it.
Okay, excellent. Now, I used to jokingly say, probably still do, is that the ATO is the Australian small business lender of choice. Most businesses that we would speak to would have ATO debt. It is just an easy way to finance your business. But there's been some changes on how they treat the debt. I think it was the 1st of July, you can no longer charge the general interest. Sorry, the general interest that you charge is no longer tax deductible. Now, previously, and just looking at this slide here, we know that it's a 11% interest charge. When you had the write-off, that'd bring it down to about 7.35% out of pocket. So if a business was looking to borrow money and they're, I guess, business rates at the moment on asset finance are anywhere from sort of 9.5 to 11 plus. It's not really good business practice, or there's no financial advantage to do it anymore, on top of the fact that it's bad for your credit file and those kind of things.
Yeah, so I don't think you could say anymore is the bank of choice. I would use the word was. So there's a couple of things here. There's the non-deductibility of the interest by the ATO. But I think, and we'll go through that, but I also think the bigger factor is the risk factor. So if you are not in a payment plan and you are just using the ATO to fund the business, there is risk of garnishee notices, which means they'll take the money out of your account. There's risk of credit reporting, which you end up on creditor watch, which we'll go through and then has huge consequences for your business. There's risk of a director penalty notice, which means a director will be personally liable for the debt of the business. There's risk of wind up, where the ATO will wind your business up. So the ATO, I think, really want that shift in mindset, which they've been talking about for a long time, that they don't want to be used as a small business bank. They don't want to be seen as the easy way to fund your business. And I think this particular change in law is reflective of that. And that what they're trying to do is change the mindset so that people aren't thinking that it's the cheap, easy small business bank and that it'll all just be okay, and we'll worry about the ATO later, or that we can automatically just get that interest back. So any interest that was incurred before this new law came in is still deductible. But any interest occurred by the ATO after this law has come in is no longer deductible. But I think that changes potentially where you may borrow from, but I don't think it changes the debt. So I think if you had the money to pay the debt, you would have just paid the debt. So I think in practical terms, it's not going to actually affect debt levels. And I think it's more how you deal with that debt and whether you look for other sources of funding, exactly like this slide shows, and how Earlypay and other people can help, and that it is comparable by the cost. And so it's a shift in mindset around that debt and how you're carrying the debt. There's still ways and still grounds that you can do an application to get rid of the interest. But again, the ATO are much harsher on those, and they want to see a lot more compliance than we've had to show in the past for that to be recovered back. But at the same time, there's no reason why you can't pay the debt or go on a payment plan or look for external funding. And then once it's all paid back, seek to do an application to get that interest and penalties back as well. So I think it's a mindset around how people are using the ATO, how they're looking at the debt, and then looking to other funders and other ways of dealing with the debt. But I don't think it will reduce the debt at all.
Okay. Yeah, we talk about or encourage people to be proactive, and get in front of this. But obviously we talk to businesses that are distressed like yourself, and it can be for multiple reasons. And ATO debt might not be the only issue. And normally it's through no fault of the directors. There's been something happen external to the market or a major debt or a client, and they've incurred this debt. And so they don't just have the ATO to worry about. There's all sorts of things like, staff paying bills, et cetera, et cetera. And it is very overwhelming. And while we encourage them to be proactive, but what happens if they leave the tax debt is left unchecked? Now, what if they do like a lot of us do in these situations, become an ostrich and stick our head in the sand?
Yeah. So I have my frog. I wonder if it's going to work. So everyone that knows me all over social media knows my little frog, because you've got to do the thing you don't want to do and you've got to eat the frog, which means you've got to deal with your tax debt. So probably I would say 98%, 99% of our clients, something has happened that has led to this debt. It's not poor management of a business. It's not trying to trick the system. Someone's got sick, a debtor hasn't paid, a boat's got stuck in the Suez Canal, so products can't get in. You've got fixed pricing contracts that's changed. There's so much that goes on in this world, and there's a lot of illness as well. The things that go on when you've got a sole director that's been running a business for so long, and something happens within their family, and so everything sort of potentially falls down around them. So we often say not to be embarrassed or not to feel shame. There's so much that is going on, and running a business is difficult. So I think that's the hardest thing sometimes for a lot of clients and a lot of directors. You're not alone, and it's not just you. And that's why we exactly have these webinars and have these discussions, and you would see the same sorts of clients, and that's why we're here to help. But the biggest issue, if you don't eat the frog, that's why I have my frog, but we can't see the frog. We need my frog on the screen. The biggest issue is that if you don't do something, the difference between doing something now compared to doing something after the ATO has taken action, I can't explain how big it is. So some of the things that can happen is what's called a director penalty notice. So a company has a company debt, and a lot of people just assume that if you are the director, you're protected because it's a company debt. If the company goes under, it all goes away. The ATO can issue director penalty notices, which make a director personally liable for the company's debt. So then if you are looking at some form of insolvency or restructure, that's not what we do and where we help. But the options for making that debt go away once you've got a director penalty notice is very different. Credit reporting, if your debt is more than 100 days over, sorry, more than 90 days overdue and more than $100,000, you can be reported to a credit reporting authority. Now, the impact of that is huge. We had a transport company ring us. Overnight, every one of their trucks could not put fuel in their trucks because they'd popped up on Creditor Watch and they'd been reported to a credit reporting company. Now,
Wow.
if they'd gone into a payment plan, they wouldn't have been reported to a credit reporting company. The same thing often happens with trades. So their trade accounts get stopped. So they have to start paying cash for everything, compared to having that limit. But once they're reported to a credit reporting authority, and even borrowing, as you guys would know, where you can borrow, your limits and what the terms are huge compared to if you had a payment plan to stop all this or if you didn't. As we sort of go down the list, things get more serious. Statutory demands are where the ATO can wind the company up. Before a statutory demand is issued, we can negotiate usually a 3-year payment plan with no upfront fees, no upfront payment needed at all to repay that debt. The day after a statutory demand is issued, as soon as that's issued, you need to pay usually around half up front, and you can only get a payment plan for 6 to 12 months. So we've got clients that have come and seen us, no action at all. We've sent them what our costings are. Unfortunately, we're not a charity. They've said, no, we want to try and do it ourselves. Can't be that bad. We'll do it. They literally sit on it for 6 weeks. And then they come back to us and they've gone, oh, we've now got a statutory demand.
Wow.
The entire game changes. And so they could have afforded a 3-year arrangement, but they can't afford half up front. And the same for individuals. Once the ATO sue you, before they've sued you and before they've initiated legal action, we can look at a 3-year arrangement. If you wait for that legal action, you have to pay half up front and the rest between 6 or 12 months.
Wow.
So the difference in that space is just incredible.
Yeah. We've just got a question here as
Yep.
well, and I'll throw it to
Yep.
you.
Yes.
They've just asked, if I had an ATO payment plan in the past, would that impact my ability to get funding now, or does it matter if I paid it back on time or not? I'll let you speak about that, particularly with creditors. Would the ATO inform creditors of past payment plans and whether they were met on time?
No. So the ATO doesn't inform creditors of a payment plan.
Sorry,
The
creditor watch.
No,
Sorry.
no, 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 not at all. So the only thing that goes on creditor watch is if you haven't actually paid.
Mm.
So with all of those actions that we had on the last slide, a payment plan stops all of that. So if you're in a payment plan, no one ever really needs to know that you've got debt. Creditors only find out if you don't have a payment plan, and then it goes on to creditor watch.
Yeah. Okay.
But even with the creditor watch reporting, we then get you into a payment plan and you make the first payment of a payment plan,
Yep.
7 days from that first payment, it gets removed from creditor watch. So the ATO, when that new legislation came in that they could list it on creditor watch, that was one of the conditions. So unlike other listings that don't get removed, this one does disappear and this one does get removed.
Okay. Excellent. Excellent. So in terms of invoice finance and some of the solutions that Earlypay can offer clients are the two main ones. And the first one is accessing cash from outstanding invoices. So if your client has a debtor's ledger with the outstanding invoices, we can use some of that, or we wouldn't potentially use all of it because that'd just leave the company with no cash or working capital to keep funding. But we can use a portion of that to make a lump sum payment, and that would help, I assume, as you talk about negotiating a payment plan with the ATO.
Yeah, absolutely. And we see that as a problem a lot with clients, that they've got all these invoices. So they've still got a very good business. But it's the cash flow where their hurdle is. And a solution like that we can tell the ATO that they've come to you, they've got that solution which will change their business moving forward, makes a big difference as well.
Yeah, yeah. Yeah, and obviously directors are under enormous pressure already. They've potentially got other creditors chasing them. One of the beauties is you're not putting your house on the line with invoice finance. So, banks will often, or banks or other financial institutions will often restrict the amount you can borrow to the amount of equity in a property. And if that's generally the director's house, so that makes it very difficult to borrow more than what the equity in the house is, particularly if you need to pay a lump sum. And then the ongoing meeting of the payment plan.
Excuse me.
So yeah, the
Yep.
ongoing meeting of the payment plan and having the cash to do that. And the other one is accessing cash from existing assets. And a lot of people don't realise this, but companies have got unencumbered equipment, trucks, trailers, all sorts of things. You can pull the cash out of that, putting it on a new finance term, that unlocks a large lump sum that can be used either as a lump sum on the tax debt or giving you some cash flow to support the business.
Yep.
And the interest on that is tax deductible, and you got 3 to 5 years to pay it off as well.
And often there's a hybrid of solutions. So often it is, how do we get cash out to then be able to continue paying the ATO, whether it's the monthly amounts, or how do we get cash out so we can pay the ATO and pay wages whilst we're waiting to get paid, or we need to do a lump sum because we have had our head in the sand. Where are we going to get the money for that upfront lump sum? And so we work together, obviously very closely with you guys and with people's accountants and other advisors, because it's not a silo. We all need to work together to be able to get these businesses back running and protect them from any further action.
So more than one way to skin a cat. I guess
Yeah,
without
and
frogs, we might get in trouble from PETA if we keep going with the analogies. But
I know, or sometimes I say it's pieces of the puzzle. So we need you guys to do your piece of the puzzle. We need the accountant to do their piece of the puzzle. We do our piece of the puzzle, and then the client can keep trading at the end.
excellent, excellent. Rightio, so we've got a case study. It's a good one that Earlypay and Tax Assure worked on, and you were instrumental in getting this over the line. But it was a manufacturing company in Australia with a $90 million a year turnover. This was pre-COVID. And as we know, manufacturing in Australia can be difficult. It's challenging and expensive. But this company had been quite successful, and to stay ahead of the curve, They invested fairly heavily in technology, and that they believe would give them a competitive edge. And as you mentioned before, there's disruptions to business are often the cause of debt, not poor management.
Yeah.
And as we'll see with this company, if we go to the next slide, so what they planned to do, the investment in the technology, that underestimated what the actual capital cost was going to be. It blew out, as these things do, particularly with IT and upgrading of servers, etc. There was more downtime than what they had budgeted for. Then the thing that killed so many businesses, and probably is one of the main reasons we're having this discussion today, is the external supply chain in COVID meant there were significant delays to orders. They couldn't keep up with their customer demand. And obviously the production planning was heavily impacted by the supply chain, sales not coming in the door, costs growing, all of that. So the company engaged with an external CFO to help them sort of out of this mess. And then that external CFO came to us, and we put together a bit of a proposal for them based on some indicative numbers. So it was a $10 million invoice finance. So cash flow would cover payments to suppliers, also give them a little bit of a cash injection. And then we unlocked about $1.5 million, well, proposing to unlock about $1.5 million from equipment finance. And the client was very happy with it. We started our due diligence, and we were soon on the phone to yourself. As we show on the next slide, what we discovered was the tax debt was a bit bigger than what we had thought. It was about $6 million. And the really big one and concern was the $1 million in unpaid superannuation. And that's, a concern from us as a financier, because the most important thing is to make sure that workers are getting paid. The ATO payment plan with this solution was put to the ATO, it was rejected. And then their files actually escalated to the ATO's legal and superannuation recovery teams. So it wasn't looking good. And then I guess you put on your Superman cape or Superwoman cape and tax
My magic wand, yeah.
So do you want to walk us through, the situation and guess, what
Yeah.
you play?
Yes, I think there's a couple of things in there. So, for those that haven't heard of Tax Assure, we're not accountants. So, we don't do any accounting work at all. We just assist with ATO debt for payment plans and getting rid of the interest and penalties. So, I think that's really important when we talk about. Often we get brought in if there has been a rejected payment plan. So I think it's difficult for accountants to be expected to be specialists in every single area, whereas we have a team of 14 that do nothing but deal with this debt. So just because a payment plan has been rejected in the past doesn't mean ours will be rejected, and doesn't mean it's not possible. It makes it a bit harder, but it's absolutely still possible. A lot of it is around the grounds and the legal practice requirements on what needs to be put to the ATO for a particular payment plan. This one was a pre-COVID one, and I think it's a perfect example as well of how the landscape has changed. So at the moment, the ATO are looking at levels of debt and how much that debt is, and the category of the client as to what sort of payment plan that they will consider. And they look at the past history of compliance and also the ongoing history of compliance. This particular rejected payment plan had lots of graphs in it, lots of numbers, lots of pie charts, lots of graphs, quite sort of an accounting based application. Whereas our application, I think if we move to the next slide, is based around what's going on for that business. So we need to show what happened outside of the control of the business and then what has changed. Now, one of the big things that has changed is obviously funding from you guys. Because that is going to assist with cash flow. It's going to stop that gap. So there was a real supply chain gap. So they were paying for materials before they got the materials, before they built what they were building, and before they got paid. So a lot of it is around explaining that and not necessarily just graphs and pie charts. We were able, again, we got involved in this one before proceedings had been issued. Now, and before the audit had actually happened. If we were engaged after proceedings had been issued, the outcome would have been completely different. And what the ATO are looking for now is showing compliance before we're able to get interest and penalties remitted and written off. In this case, which is what used to happen, but the ATO have really tightened down. But if you borrow and pay off the debt in full, we can still go back and get rid of the interest and penalties. The super was put into a payment plan, and because that was put into a payment plan before any action had been taken, we were able to get a long-term payment plan for that. And again, because we put the main debt into a payment plan before there was any legal action, that they were long term. Now, this is a perfect example. If we had not been engaged at this point and the client said, no, we just want to roll the dice, and legal action had proceeded, it would have been a completely different outcome because they would have needed a lot more upfront, and it would have the payment plan would have been much shorter. Again, this was not a badly run business. It was the gap between the money coming in and the money going out, which is exactly what needs to be described and how we work with you guys as well.
So just a quick one there is, do you find the ATO is more willing or more responsive to engage with companies like Tax Assure, or is it, do they, I guess it's, a director's coming to them or a financial controller, they don't know the ATO's processes as well. Do you find that they're more willing to engage and you'll get better outcomes?
Yeah, so I think the nail on the head is the processes. So yes, we sometimes people ask if we've got a direct line. I once had a client tell me that they wanted to pay me so I could give them my contact. And I'm like, it doesn't work like that. We don't have a secret phone number. We don't have a direct line. We do know a lot of the case officers because we're dealing with them all the time. But the biggest thing in that is exactly what you said, is understanding the processes. So what are the ATO looking for? What do they need to be able to say yes? What as a business do you need to show to the ATO to get them to agree to a long-term arrangement? What compliance, what's changed, what the viability of the business is. And at the moment, the ATO's recovery is changing, their recovery action is changing very quickly. Now, you have laws, which we've talked about, but there's also ATO policy. Now, policy is things that they decide internally. That doesn't get published anywhere. So there could be a policy change that happens within a week. So you might have done something that worked 6 weeks ago or 2 months ago or 3 weeks ago, and it doesn't work anymore because of policy change. So a big benefit is, one, we know exactly what they're looking for. We understand the law, we understand the systems, but also because we're at the coalface and knee deep, so to speak, in all of this, if there is a policy change, we'll see it straight away. So we'll know that something, and it's something interesting as a business owner, that you actually have to shift. So you've got to be quite nimble, which is an interesting. Sorry, my dog is barking. That's always fun for a webinar. A policy shift. So we have to be nimble in what will work, in what won't work, in moving forward and knowing how to get the clients the best outcome. And so a lot of that is not cookie cutter either, because of the change, and every client is so different.
Right. Excellent. All right. Just so on the final note, I guess with the the case study we're talking about, I mean, we were able to provide the funding. Obviously, you negotiated the tax debt. Um, you know, it's got to be said that it's really rewarding to help businesses like this.
Yeah.
It's not a silver bullet though. The problems, it's not the problems go away. There's a solution there, and it gives you, to use a cliche, light at the end of the tunnel. But obviously, the directors and the business still has to be disciplined to get through this. But it's a lot better than the ostrich approach and the potential ramifications of not taking any action. So, some really good advice there today, Olga. Particularly, I mean, the takeaway for me is get on the front foot. Don't be embarrassed. There are people that are willing to help. There is a process that can be followed, and the more proactive you are, the better the outcome's going to be.
Yeah, absolutely. And even we're always happy to have a chat. But even like all of our dealings with Earlypay and yourself as well. I think sometimes when people are using a lender, they're too scared to tell the lender that there is debt there until it's all got out of control. But the fact that we're even doing this webinar is that you want to support businesses. You want to, it's not, I'm even doing a lot of work with the major banks at the moment. And that used to be an automated no. As soon as there was debt, you effectively got thrown out. But as well as the ATO having the mind shift that, they're not a small business bank, that your lenders out there, like you guys want to support businesses and are not going to throw them out with debt, and want to help and want to support. So it's a matter, I think, of having that conversation of how we can all work together to assist these businesses. I say the word payment plan a lot because if it's a viable business, you can get in a payment plan, we can look at the interest, and we can move forward and save that business. And it sounds so simple, yet the longer it goes down the track, the harder that can be.
Yeah, absolutely. Well, hopefully, we can replace the ATO as the Australian Small Business Index
Absolutely.
list. That's our goal.
And you're not as scary, right? I don't think you're going to go
Exactly.
garnishing people's bank
Yeah,
accounts.
exactly. Um, So I guess we'll just open it up now. Is there any questions? Does anyone want to ask Olga anything? Please just stick your hand up or on the Q&A chat box.
Yes.
One question here. Once a payment plan is set up for BAS, are businesses still businesses required to still lodge and pay future BAS obligations on time to remain compliant? Could
Yep.
invoice finance be used to pay this? Well, I'll let you answer the first part, and then I can answer the second, I guess.
Yeah, yes, and yes. So that's absolutely a requirement. Once you're in a payment plan, your ongoing obligations must be paid in full and on time. And if they're not, the payment plan will default.
Okay. Even if they keep lodging but don't pay?
Yep, they have to lodge and pay on time. If they
Okay.
don't, the payment plan will default and we're back to square one again.
Yeah. Okay. But even so, if they didn't have the money to pay, keep lodging, would that be sound advice as well as just keep
Yes,
lodging?
absolutely keep lodging. But if there is an option for using you guys and using funding so that they're able to pay that ongoing BAS, 100%, because otherwise it's almost behind the eight ball and not just back to initial square one, because the ATO are now looking at how many defaulted arrangements there are. And so if you cancel an arrangement or have too many defaulted arrangements, it's harder to keep getting new arrangements.
Okay. Okay. Just to answer that from for an invoice finance point
Yes.
of view, yeah, absolutely. We can help businesses. Obviously, there's qualification criteria that goes with invoice finance, but more than happy to talk to someone. ATO debt doesn't scare us. ATO debt that's being ignored, we have concerns about, but we want to work with clients to get them, up to date with their ATO, or at least be in a position to negotiate with the ATO. What happens if I'm in a payment plan I can't afford?
So there's a couple of things. We often renegotiate payment plans. A lot of clients come to us and they've been either just said yes to the ATO calling them, or their accountant has just said yes to a bad payment plan. So many times we can help renegotiate a new payment plan that is absolutely affordable. Alternatively, if it's already a good payment plan and we can't do any better, that's obviously where they're going to need to look at finance or need to look at other sources of funding to supplement that payment plan. But probably 9 out of 10 times we renegotiate much better payment plans for clients.
Okay. And what fees do Tax Assure charge clients to review and discuss their tax debt?
So the first bit's free. So because every matter is very, very different and every solution is very bespoke to a client, what we do is we do a deep dive, an initial free review, where we see what's going on behind the scenes, and that allows us to effectively scope the job. We then have a chat with the client and go through that review, go through an initial report, let them know high level what we think we could achieve for the client, and what our fees would be before they engage us.
Okay. I think the final question I've got here is, I submitted an application for remission of a GIC and penalties 3 times, including 2 revised versions. Our third and final application was expected to be finalised 23rd. I've called the ATO a couple of times for an update. Sorry, I'm going to have to scroll down here. A couple of times for an update and was advised to wait as the application is still in progress. Is this a good sign for a positive outcome?
I think it's a completely neutral sign. The ATO are very, very difficult with the remission applications. The fact that you've had 2 rejections makes the third much, much more difficult. The more rejections there are, the harder each application gets. If, depending on the amount of the interest that you're seeking back, the longer the ATO take, I would not say it's positive or negative. It can completely go either way. But what you're experiencing is very usual in the delays and the time frame in getting a response back in relation to a remission application.
Yeah, and for that individual, we'll put up some contact details as well for Olga's, and I'd really encourage you to reach out. I'm sure you can offer some sound advice and with some more accurate information. If you'd like to have a chat regarding a tax debt situation, please submit your details via our form. We'll be sending that out. I think Estelle might be sending that out to you soon. We'll also be sending out an email, I believe, after the webinar. You'll get a video, so you get to see Olga's lovely face and unfortunately mine.
And my frog. We were going to do a
And the
competition.
frog.
We wanted to name the frog.
Yeah, I
If
think
anyone has a name for my frog.
GST. There you go. And sorry, I've just got one more question I think's come through. Once you've engaged with our referred client, what do you need from us as the tax agent?
So every tax agent is completely different. So some tax agents handball it. We're a little bit like your surgeon. So often the tax agents are like the GP, look after the general health, and we come in to deal with the smashed knee. So we just get listed as an authorised contact, but we don't go into the portal. So some tax agents stay involved and assist with financials, but a lot of the time the tax agents let us clean the client, we fix them, we get them in a payment plan, and then we hand them back to you and you continue on with doing your work.
Excellent, excellent. There's a couple more questions there. I think
Yeah, absolutely.
one's on a referral. It's with us. That person can contact me after, I think. Okay, that's the end of it. So, Olga, thank you very much for your time.
My pleasure.
When you see, I guess, a webinar on tax, you think it's going to be fairly mundane and boring, but that was really interesting, and some really key messages from that is just get on the front foot.
Yeah, don't ignore it. The difference, as I said at the beginning, I cannot stress the difference between dealing with it when there's no recovery action and dealing with it after. And I don't think it's a matter of if there's recovery action at the moment. There will be. We're seeing such short time frames, such small debt being chased. There's so many solutions that are out there. Talk to you, talk to us, talk to everyone. If it's a viable business, we're all here to support and really want to promote these businesses continuing to thrive.
Excellent. Thank you very much for your time.
Thanks for having me.
Pleasure.
Okay,
Bye for
bye.
now.